Our next guest is predicting a solution on the fiscal cliff, improvements in the U.S. economy and stock markets next year. Gary Thayer joins us with his 2013 forecast. He's chief macro strategist at Wells Fargo Advisors. You know, Gary, as I was reading your report, it's very easy to be negative these days, and you're just the opposite. And the title of your report is A Time for Action, which has a positive twist to it. Tell us what you mean by that.
Well, you know, Susie, over the past year, we've seen lawmakers kick the can down the road. We've seen investors get very defensive and holding back on their investments, waiting for the election and the fiscal cliff. And we think next year that policymakers and lawmakers in Congress are more likely to take some action. And we think investors are more likely to look forward along with businesses as to other opportunities rather than sitting back and doing little.
All right, let's go through some of your predictions for the year. Starting with the U.S. economy. You're predicting that it'll grow by 2.5%, assuming that there is a fiscal cliff deal. But you think it'll go down 0.5% if there is no deal. And then on the jobs front, let's take a look at the next graphic here. The unemployment rate gets down to 7.5%. Right now, it's just below 8%. So a little bit better. But all around, when you look at the economic outlook, a slow recovery still, right?
Yeah, you know, we are still expecting that as we work through the fiscal cliff problems, and we do expect there to be a compromise here over the next month or so, that the economy will probably build momentum as we go through next year with the housing market doing better and consumer confidence up. We expect business confidence will improve with the potential agreement on fiscal cliff, and that together that'll be better income growth, more consumer spending. And so we're looking for a 2.5% growth rate, which we think will bring the unemployment rate down to 7.5%.
And you're pretty upbeat on the stock market side, too. Taking a look at your forecast for the S&P 500, you're calling for a gain of 8%, that it'll get at best to the 1575 level. Right now, to the 1400 level. You know, what's going to give investors confidence to take their money out of cash and invest it in stocks?
Well, again, Susie, we've had some significant headwinds over the past year or so, and we think that as we get past the fiscal cliff and job creation continues, that I think investors are going to be feeling a little more optimistic. And we think that with modest earnings growth, we're only looking for earnings to be up about 5%, that with a little extra improvement in sentiment, that investors could push the market up about 8% next year. Not a big gain, but a really decent one given the slow-growing economy that we're seeing right now.
Now, your whole forecast is depending on an agreement on fiscal cliff. If we go over the cliff, what happens to your forecast? What will you be saying at the start of next year about the outlook for the economy and stocks and jobs?
Well, I know, Susie, a lot of people are focused on the January 1st deadline, but, you know, we don't think if we don't have agreement by January 1st that everything falls apart. What we're watching very closely is if there's still negotiating taking place. If we still see both sides talking, I don't think the January 1st deadline is going to mean that much. We would only worry about the worst case scenario with the economy contracting next year if there is a real stalemate and both parties walk away from the talks. And we don't expect that. We're beginning to see some signs that there is some willingness to compromise on both parties.
Mm-hmm. Well, as we said from the start, you're pretty positive on the outlook. Thanks a lot, Gary. Gary Thayer of Wells Fargo Advisors.